Good morning, students. Welcome back. So today we'll plan to cover this AS7. Yeah, we started this and some part of this accounting standard we have already discussed. Let's do a quick recap before we really get on to our discussion for today. Okay. Now, in relation to AS7, the first point, okay, that is about the coverage. So we understand that AS7 is in relation to the construction contracts. Okay, so that means which entity will come under AS7 contractor having a construction contract. Yes or no? Yeah. Further, as regards the meaning of construction contract, now how do you define that? So it's a contract which may involve construction of assets or a combination of assets. The important aspect was about the time. Therein we discussed that it will require a significant period of time for the asset to get complete. And that's how you will be looking at different types of construction. Okay. Now, some of the examples as we discussed could be in relation to, say, a bridge, okay, a flyover getting constructed, right? Now, as regards these contracts, we discussed that there are two ways they may be agreed between the customer and the entity. One is the fixed price, wherein the price is fixed in terms of per unit of the total amount. Other one is wherein the price is not fixed. Why? Because markup is fixed. So the cost which is incurred, a markup will be charged on them. Okay. Now, in relation to any of these types of contracts, fixed or costless, there are different elements of revenues, and we need to understand as to how do you recognize revenue in relation to all of those elements. Okay, so therein we understand if you talk about the initial amount of revenue, that is fixed, right? Because initially the contract has been signed off, everything has been discussed, customer has agreed. So as far as recognition of that initial amount is concerned, there is absolutely no problem. But any further component which may arise in relation to that contract. Now, what could be that further component? Now, that further component be in relation to claim, any sort of escalation. Yeah, that could be in relation to any sort of revision, okay, any variation. Now, that is one thing which will have to be then negotiated by the contractor with the customer. Principally, it will be there, but that will have to be discussed further. Yeah, so it's like if let's suppose I have given you some work and you have completed, but if I am expecting something more, okay, so first of all, we'll have to discuss, agree on that. Yes or no? So that's why some of those other components need to be first of all agreed, and that is when you get on its recognition, right? As regards the contract costs could be of various types. Every time we look into the contract, we need to just simply assess one thing. Now, what is that point? We need to find out whether the cost is incurred in relation to the construction of the project. If the cost is incurred in relation to the construction of the project, that's when the revenue can be recognized, otherwise not. Yes or no? Yeah. So that's how we need to look into. Now, if you look at this table, if you look at this particular portion, it says as regards the revenue recognition, as regards the booking of any cost. Okay, so different criteria are required to be met. Now, when it comes to the standard, now considering the nature of the contract that we may have, what may happen is that the revenue will have to be recognized over the period. Okay, again depending on the terms which are there. Now, one of the methods for recognition of revenue happens to be percentage completion. And let me just take you to the working file. Just give me a minute. Just right now, revenue will have to be recognized on the basis of percentage of the work which is completed. So now we'll try to understand as to what is this percentage completion method. Okay. How is this required to be applied? In a very simple manner, we can say that depending on the work completed, whether it's partial or fully, revenue will be recognized. Okay. Now, what do you mean by partially? And how do you determine the partial completion? That's one of the requirements which the standard deals with. Okay, in fact, that's one of the things which is required to be dealt over here. This is what you call as percentage completion method. Okay, for example, say there is a contract for 3 years. Today the contract is signed. Okay, let's suppose the value of the contract is 30 crore. So how do you know the value of the contract? Because the contract is signed. It's a long-term contract for 3 years. It will involve construction of an asset which will take 3 years. So that's the expected one. Now tell me one thing, that when you get into any sort of contract, okay, when you, if let's suppose you look at it from the perspective of the contractor, yes or no? So the contractor, before agreeing on this revenue, so I'm just talking about this revenue. Yeah, contractor will work on the estimation in relation to the cost which is required to be incurred. Yes or no? Yes or no? Contractor will get into that estimation. What do you think? Over to you. Yeah. So says yes. Now this is an important part to be understood. Now why is this estimation required? There are two reasons. Huh? One reason you can say is going to be used by us for our accounting purposes. Another reason is the business reason, without which the business will not happen. If let's suppose this contract is signed on this date, okay, let's suppose on 1st April this contract has been signed. So for getting into this contract, the contractor would have started the negotiations some time back? Yes or no? It will not happen that the contract, the day it is signed, the same day the contract will be discussed, the same day it will be signed off. Yes or no? So that's how the practically things will work, and particularly in respect of such large type of projects, which will involve huge amount of money and which will also involve substantial period of time. Don't you think that the negotiations on the part of the entity as well as the customer will take some time? Over to you. What do you think? Will that happen or not? Tell me quickly. Yes. Now, in this case, this period that we are talking about, this period is the one wherein the contractor is discussing with the customer. But before initiating the discussion with the customer, what will the contractor do? Contractor will assess his cost. He will work out the cost that for executing this project, what is the cost that he is going to incur. On the basis of the cost that he will determine, he will also set a price. Yes or no? So therefore, it may have happened that the contractor expected that for such type of project, he will incur a cost of 25 crore. Okay. And considering this cost, what did he do? He set this price of 30 crore. Correct? That's how things will work. Yes or no? Now the same cost is the one which the contractor will also use over the period to monitor the project. So every time if you look at a company, in fact, every company will have budgets. Okay. And any actual cost which they incur, they will always compare that with the budget. That's how they will be monitoring the costs. Yes or no? Yeah. So the same thing goes with the contractor also. So he will also be monitoring the costs. And he will be required to do that. Only then he'll make the money, he'll make the profits. Right? So this amount of 25 crore is what you call as estimated cost. Okay, so this is what you call as estimated cost. Estimated cost in respect of this contract. Estimated cost to complete the project. Correct? So this is the total estimated cost. Similar to what you have over here. So this is the total contract revenue. Yes or no? Yeah. Now, if we look at the revenue, so the revenue amount is fixed. So that's why we are not expecting any changes in the revenue. Of course, all of those variations, etc., those are separate things. We are talking about the initial amount of revenue. So initial amount of revenue that you can find over here is fixed. But if you look at this estimated cost, can we say this is fixed? Please remember this estimated cost has to be incurred over a period of next 3 years. Correct? This estimated cost has to be incurred over a period of next 3 years. So can we say that this estimated cost is fixed? This will remain unchanged? What are your thoughts? Can we say that? Tell me. Devu says no. What about others? Quickly. Can we say that? That this estimated cost will remain fixed? It will not change? Soumya says no. And why no? Almaz is also saying no. Why no? Because it's an estimate. It's not an actual number. Yeah. And to come to an amount with 100% accuracy, which will not change, is not possible. Yes or no? Yes or no? Correct? But this estimation is important. Why? Because if this estimation is not done, then how will the contractor reach this contract revenue? Number one. How will the contractor monitor the progress on an yearly basis? How will the contractor compare the actual cost with the budgets? Correct? So that's why it is required. Okay. Now, this is first part to it. Okay. So we have just tried to understand that this estimated cost is something which will be there at the beginning of the project. Now, year on year, depending on the actual cost which is incurred on the project, what will happen? Definitely some changes may arise in the estimated cost. Yes or no? So let's suppose if you talk about first year, some cost will be incurred, say X. Okay. But let me just put the amount down. Let's suppose in the first year, some cost is incurred, say 8 crore. Okay, 8 crore, let's suppose is the actual cost incurred. Now what will happen? Now once again, at the end of first year, contractor will estimate. Okay, you may be thinking, but what is required to be estimated, sir? Because cost is already estimated. See, the estimates are required to be reassessed. Why? Because they are based on some assumptions. When the actual cost is incurred in the first year, can you tell me what should be the estimated cost, or you can say the remaining estimated cost to complete the project? Tell me, what should be the remaining estimated cost to complete the project? Tell me quickly. 17 crore? Yeah. Mohammed Almaz, they are saying 17 crore. Okay, so it should have been 17 crore. But now, once again, contractor will revisit this number. That for the next 2 years, is he still expecting to incur 17 crore or not? Why? Because it may have happened that during the first year, actual cost has increased as compared to what he expected to spend earlier. Yes or no? So that's why he may now want to revise this estimate, say from 17 crore to 18 crore, or it may have gone down. So he may want to revise this to 16 crore. Okay, clear? Yeah, so any of this revision is possible. Let's suppose next year again, an actual cost of 10 crore is incurred. There again, let's assume he revised the estimate to 18. What will he do? Now he will have this remaining estimated cost of 8 crore, but he will once again reassess this. That in the third year, is he still expecting to incur 8 crore or will the amount go up? He may think no, in the third year this amount will go down. So that's why he may want to bring it to say 5 crore only. Yes or no? And then of course the actual cost will be increased. So this estimation of the cost year on year is required to be done. And we'll discuss as to why is this estimation required, why this will have an impact on our accounting requirement also. Okay, in some time we'll talk about. Now, we were talking about percentage completion method. Yes or no? That percentage completion method is required to be applied by the entity for revenue recognition. Now let's try to understand as to what is the relevance of this estimated cost over there. Yeah. Now, when it comes to the percentage completion, okay, so there are few ways entity needs to look at. Now, what does it mean? Let's understand that. If you are picking up a project for next 3 years, so every year, what do you need? That what is the percentage of the work complete? Means in the first year, whether the work is 30% complete, 20% complete, or what is the percentage? Correct. Now, how do we reach that percentage? So there are few methods which can be used. What is the first method? Contractor can engage a technical person. Technical person means who will be involved in the construction, who understands how this construction is progressing. So the technical person will visit that particular asset. Okay, he will do some technical evaluation, and he will then give the percentage. So he will specify that the work is 30% completed. That's one method. Another method is to get into the labor hours. Say, for example, it was estimated that 1 lakh labor hours will be spent over 3 years. In the first year, 25,000 labor hours have been spent. So what does it mean? 25%. Yes or no? So this gives you 25%. Okay, so this one is based on labor hours. Third, and the most commonly used method. What is that? That is what you call as cost method. Okay, so now what is this cost method? How does it work? So let's suppose in the first year, 5 crore is the actual cost incurred. Now, actual cost is actual. Actual is known to us. Yes or no? Actual cost is something which is known to us, right? So what do? You divide this actual cost by estimated cost. Can you tell me what is the percentage you will get? So if you divide the actual by the estimated cost, what is the percentage you will get? Over to you. Devu says 20%. I think Soumya has the same answer. Very good. 20%. So this 20% becomes the percentage completion. Okay, and therefore, in the first year, in the P&L, what do you take? 5 crore will go to the cost. Why? Because this is the actual cost. And 20% of 30 crores, which is 6 crore. So this will go to the revenue. Okay, this will go to revenue. So in this case, the revenue has been recognized in proportion to the work completed. 20% work is completed, so recognize 20% of the revenue in the first year. As we discussed, that this method of deriving the percentage completion based on the cost is the most commonly used method. Practically also, this is the method which is used by the companies. Okay. Everyone clear on this? Now what we will do is, I think we can pick up one example and we'll just try to apply some of these concepts over there. Okay. In fact, before we get on to that, there's one more point we can discuss. Right. Okay, so in the first part, we have discussed how the percentage completion will work, how the revenue will be recognized. So in the P&L, what will you see? In the P&L, the revenue will be there 6 crore, cost will be there 5 crore. There will be a profit of 1 crore. Now, see the example that we had picked up. Okay, that example, if you understand the project, total revenue was 30 crore and total estimated cost was 25 crore. So on an overall basis, this project is in a profit. Even though the revenue will be recognized on a proportionate basis, but if you look at the overall period, this project is in a profit. Yes or no? Yeah. And what is the amount of profit? 5 crore. So this 5 crore amount of the profit, this will be recognized by the company over a period of 3 years, depending on the percentage completion. Okay. But sometimes we may have another situation. So let's understand what is that. Sometimes it may happen that revenue is fixed for 30 crore. Okay, so this is the total contract revenue. And against this total contract revenue, total estimated cost is higher. Let's suppose it's 32 crore. Now in this case, do we have a profit or loss on this project? What do you think? In this project, do we have a profit or a loss? Tell me. Clearly a loss. Virender, I think Soumya, Sangeetvani, they are saying a loss, right? Now, let's try to understand this loss. If there is a loss of 2 crore, what is the amount of loss? 2 crore. Okay, so now if you look at this loss of 2 crore, how will this get recognized? This will get recognized partly in first year, partly in second year, partly in third year. Yes or no? That's how it will be done. Why? Because when you are recognizing proportionate revenue, proportionate cost, so this booking of loss will also be proportionate. Over a period of 3 years, no doubt loss of 2 crore will be recognized. But over here, the standard is slightly stringent. Standard says you need to apply the prudence concept. Okay. Now it says that, see, on day one, you have a loss on the project which is sitting in the books. So there is a loss of 2 crore which is sitting in the books and waiting to be recognized. Yes or no? Yeah. So this loss is waiting to be recognized. So you can't hold this loss for 3 years. You will have to recognize this entire loss in the first year itself, applying the prudence concept. So the standard is not saying that you will recognize entire revenue or entire cost in the first year. No. Revenue you will recognize on proportionate basis. Cost you will recognize on actual basis. Standard is only talking about this loss. Okay, so this entire amount of loss, this has to get recognized immediately. Okay, yeah. So every time you have any long-term contract, you need to look into it. Why? Because even though you will be applying the requirements of percentage completion, something like this, you need to keep that in mind that along with percentage completion, another consideration of recognition of entire loss, if at all it is there on the project, that has to be also done. Okay. Yeah. Any questions, any doubts so far? Anyone? Any questions, any doubts? Because then we'll look at some questions. Huh? Then we'll pick up some questions. Any questions? Render is clear. What about others? Yeah, everyone clear? All right, great. So let's pick up some questions now. Okay. Okay, so let's look at this question number 3. Okay. X Limited commenced a construction contract on 1st April X1. Fixed contract price agreed was 2 lakhs. Yeah. Company incurred 81,000 in X1, X2. So that's the actual cost company incurred for 45% work. Right? Against this, company received 79,000 as the progress payment from the customer. So you can say the money which is collected from the customer. Right? Next year, X2, X3, cost incurred was 89,000 to complete the rest of the work. Okay. Show the extract of P&L and the account of the customer for the related years. Okay, so let's get on to this. So I'll get on to the solution, right? Now, in this case, let's pick up the P&L. Okay, in the first year, we understand that proportionate revenue will have to be recognized, right? Now the contract price is known to us. Yes, that is 2 lakhs. 45% work is completed. So what is going to be the total revenue? 90,000. 90,000 for the first year, correct? So for the first year, what do you have? 90,000, right? So this 90,000 we are taking to the P&L in the first year. During the first year, actual cost incurred is given to us. So that again will go to P&L account. 81,000. So therefore, there is a net profit of 9 lakhs. Yes or no? 9 lakhs. Now, we also need to prepare the customer account. So let's look at the customer account alongside in the first year. In the first year, customer account will get debited by the revenue recognized. That's 90,000. Yes or no? Why? Because this much revenue is recognized. So you'll book the receivable corresponding to this much revenue. Against this, company has received 79,000 in cash. So 79,000 cash is received. Correct? So the balance amount will be what? 11,000, which will be carried to the next year. Okay. Now, moving on to next year. Total contract revenue was 2 lakh. In fact, in the second year, contract is completed. So the remaining revenue will be recognized in the second year. Okay. We are told that for the second year, cost to complete was 89,000, which has been incurred. Okay, so that will be incurred in the second year. Therefore, in the second year, what will you have? A profit of 21,000. Okay, now let's get on to the customer account. So first of all, we'll bring the balance. Okay, so this balance will be carried forward. Correct. Second year, this contract revenue will increase the receivable, right? And in the second year, it's been assumed that the money is collected. You may also take it as a carry forward balance. See, the study has assumed there is a carry forward. Okay, clear? Any questions if you have on this? It's a simple one. Still, if you have any questions, any doubts on this, please let me know. Tell me quickly. Any questions on this? Clear? Okay, great. So let's move on to the next one. Yeah. So let's move on to the next example now, right? Okay, so let's look at this example number 4. X Limited commenced a construction contract on 1st April X1. Contract price agreed was reimbursable cost plus 10%. So that's the arrangement that they have. Okay. So this is the arrangement that they have. Fine. company incurred 1 lakh in X1, X2. So that's the cost, of which cost of 90,000 is reimbursable. Further non-reimbursable cost to be incurred to complete the contract are 5,000. Other costs to complete the contract could not be estimated reliably. So let's understand as to how do you record this in the first year. So in the first year, company has incurred a cost of 1 lakh. So will this go to P&L? Answer is yes. This goes to P&L. Okay. Now, what is the total contract revenue? Can you tell me what is the total contract revenue? Now, this is not given in the question. You will have to compute that. We understand that out of 1 lakh, 90,000 will be payable by the customer. Customer will not pay for 1 lakh. Customer will pay for 90,000. Okay. Means that's the cost which he has agreed. On this cost, customer will pay a margin of 10%. Means the profit margin. Means total contract revenue will be what? 99,000. Okay, that will be 99,000. Now, in this case, as against this 99,000 of the cost, as against this 99,000 of the revenue, which is the total revenue, what do you have? You have a cost of 1 lakh which is already incurred. Yes or no? You have a cost of 1 lakh which is already incurred. Further, a cost of 5,000 is also pending to be incurred. So that will be incurred in the next year. So therefore, against this total revenue of 99,000, what is the total estimated cost? Can you tell me what is the total estimated cost? 1,05,000. That's what Tanisha says. I think Anil has the same answer. Very good. Okay, Soumya has the same answer. So therefore, we now need to apply the concept of prudence. Yes or no? What does it require? If you have a loss, recognize it upfront. Don't wait for the next years. Okay. Now this cost of 5,000 will be incurred in the future years. So we are not saying recognize this cost. We are saying only recognize the loss. So there is a loss of 6 lakhs. Okay. So that provision for loss has to come in the first year itself. Now, let's try to understand this. See, if we look at the P&L, so what do you have? In the P&L, against this revenue of 99, cost of 1 lakh is already recognized. Correct? Correct? Okay. 5,000 is required to be spent in the next year. So if you continue with the same basis, then what will happen? In the first year, we will recognize a loss of 1,000. Yeah, so all of these figures are in thousands. Yes or no? So in the first year, what will happen? You will recognize a loss of 1,000. But actually, what is the amount of loss that we need to recognize in first year? Can you tell me? What is the amount of loss? 6,000 is what Soumya says. So for doing that, what do? You will have to recognize that upfront. So create a provision for loss in the first year itself by 5,000, which will make this loss from 1,000 to 6,000. Clear on this? Everyone clear on this? Over to you. Any questions, any doubts if you have? Okay, great. Tanisha is clear. Debu is clear. Any questions? Everyone clear? Sure? Okay, Sangeetvani says very clear. Very good. Okay, Soma is also clear on this. Great. Now, on the similar lines, let's continue. Let's pick up next example. Okay, now you need to solve this and let me know the answer. Please don't look at the solution. Okay. PQ and Associates undertake a construction project for which the following details are available. Total contract value is 40 lakhs. Cost incurred till date is 3 lakhs. Okay. Estimated future cost of completion 30 lakhs. Work completed 10%. Work has started some time ago and there's an uncertainty with respect to outcome of the contract due to expected changes in regulations. PQ is certain that it would be able to recover the incurred cost till date. In this case, tell me, what do you do? Now, let me just give you one principle before we move further on this. Okay. So the standard says if the final outcome of the contract, so if you look at this flow chart, if the final outcome of the contract can be estimated reliably, then what do? Recognize revenue and cost as per percentage completion method. But if for some reason the final outcome of the contract cannot be estimated reliably, so revenue should be recognized only to the extent of cost incurred, of which revenue is probable. Cost should be recognized as an expense in the period in which they are incurred, and an expected loss on the construction contract should be recognized immediately. Okay. Now, let's come back to the question now. Okay. So now, in this case, tell me, what will be the accounting requirement? Over to you. Over to you. So who will explain this? Who will answer this? Quickly. So we have a total contract revenue, cost incurred till date, estimated future cost of completion is also given. Okay, work completed is 10%. So that is also given to us. Over to you quickly. So how will you record this? Quickly, over to you. So who has solved this? Okay, great. Sangeet Vani has solved this. So Sangeet Vani, can you please explain? Yeah, if you have true, can you please explain how should this be dealt? What is going to be the accounting requirement? Yeah, can you speak up? Would you like to explain this? Okay, great. Sangeet Mani, please go ahead. I think Anil has also computed some numbers, but let Sangeet Mani explain this. Yes, Sangeet Mani. Over to you. Please raise hand. Please explain how will you deal with this?
Sir, they are uncertain with the contract, sir.
Right.
So we have to recognize to the extent of cost incurred.
Okay. So what will be that amount?
So 3 lakhs should be the cost and it should be
Right.
recognized, sir.
Okay. So that means in the first year, you are saying effectively there will not be any loss, there will not be any profit. Is it?
Yes, sir.
Okay. But tell me one thing, that whether the outcome can be estimated reliably or not. Okay, which will become the basis for the revenue recognition, no doubt. But have you also looked at the overall contract, that overall on an overall basis, is this contract running into profit or loss? Did you do that evaluation?
Yes, sir. Profit, sir.
So how do you say there is a profit on an overall basis?
The total contract value is 40 lakhs
Okay,
and they incurred 3 lakhs.
right.
The cost for completion is 30. So the contract comes to 33 lakhs. Out of 40 lakhs, we have to reduce 33 and 7 lakhs should be the profit.
Okay, very good. So that means we do not have that concern of recognition of a provision for a loss. Correct? Okay, great. That helps. All right. Anyone else who has solved this? I think it's a simple one. It's more about the concept rather than calculation. I think Devu has also solved this. Very good. All right. So now let's look at the solution. See, in the given case, we have this concern. There is an uncertainty with respect to outcome of the contract. Why? Due to some regulatory requirements. But anyways, it doesn't matter to us, the reason. The moment you say that contract's outcome cannot be estimated reliably, so we'll have to go slowly. In terms of what? In terms of cost? No, because the cost which is incurred will have to be recognized. But for revenue, we have to go slow. So therefore, instead of following this percentage completion, what do? You will recognize the revenue to the extent of cost. Okay. Actual cost is 3 lakhs. So that will be recognized as 3 lakh. But the revenue will be now recorded to the extent of 3 lakhs only. Okay. Now, if in case, let me just change this slightly. If let's suppose this uncertainty was not there. if let's suppose in the question, this uncertainty is not there. Let's suppose this sentence is not given about the uncertainty. Okay. Can you tell me what is the amount of revenue you will then recognize along with the cost in the first year? Over to you. So I'm saying, please take out this sentence. In such a case, what is the amount of revenue and the cost that you will recognize in the first year? Over to you quickly. Great. Sangeetani says 3,30,000. Devu says 4 lakh. Tanisha says 33 lakhs. Is it? Jendra says 4 lakhs. Mohammed says 4 lakh will be the revenue, 3 lakh will be the cost. I think same is the response from Somya and Almas. Then I think it will be very simple. So if you look at the percentage completion, that is already given to us. We are not required to compute that. Already given to us. What is that? 10%. So what is the cost you will recognize in such a case? 3 lakhs. What will the revenue you will recognize? 10% of total contract value, which is 4 lakhs. So that means in the first year, a gain of 4 lakh will be recorded, means the profit. So in a way, we can say that due to this uncertainty which arises in respect of outcome of the contract, what did the company do? Company became prudent and did not recognize this profit of 1 lakh. Okay, so this recognition of profit of 1 lakh has been held, or you can say this has been postponed. Understood? Clear? Everyone clear on this? Any questions, any doubts you have so far? Please let me know. Any questions, any doubts if you have, please let me know. Any questions? No, Tanisha is clear, right? Okay. So let's move on to another example. Yeah. Okay. So let's pick this next example. And you need to solve this out. Okay. A construction contractor has a fixed price contract for 9,000 to build a bridge. Initial amount of revenue agreed in the contract is 9,000. Okay. Contractor's initial estimate of the contract cost is 8,000. Yeah. It will take 3 years to build the bridge. By the end of year 1, contractor's estimate of contract cost has increased to 8,050. In year 2, customer approves a variation resulting in an increase in contract revenue of 200 and estimated additional contract cost of rupees 150. At the end of year 2, cost incurred include rupees 100 for standard material stored at the site to be used in the year 3 to complete the project. Okay. So in this case, we can say actual cost incurred till date for various years. Year 1, year 2. I think that information is not available. So let me just put down that information for you. Actual cost incurred till date 2093, 6068. Okay. And of course, the balance cost you already know. So this is the actual cost incurred till date, right? So now you need to record this on an year-on-year basis. You need to compute the contract revenue that you will recognize in the first year, second year, third year, contract cost that you will recognize in first year, second year, third year. Over to you. Over to you. Quickly. Please start solving this, compute the amounts, and let me know your answer. Okay. Waiting for you. Yeah. Over to you now. You may start sharing the numbers for year 1. If you're through, great. Anil is saying in year 1, 2308. But year 1, 2308 is what, Anil? That's the cost you'll recognize or revenue? What is this 2308? Everyone, you can start sharing this. Okay, great. Anil is saying it's revenue. Very good. So Anil has got the revenue to be recognized in year 1. And what is the cost, Anil, that you will recognize in year 1? What about others? You can start sharing your responses year by year. Quickly. Great. Mohammed has computed year 1. Mohammed is saying, sir, in year 1, contract cost will be 2143. Revenue will be 2080. I think Somya is getting a different answer. Somya is saying cost will be 2093. Revenue will be 2340. So 3 answers I have received, all 3 different. Good. What about this? What about others? And you can just then share the answer for year 2, year 3 as well. Okay, Anil, I think, has shared the cost for the first year, 2064. Okay, fine. Mohammed is saying year 3 contract cost will be 6068. Is it year 3 or 2? I understand it's 2. But anyways, you have written this to be 3. So I'll assume that to be for 3. But what about year 2? Quickly. Okay, so Soumya is saying year 2 cost is 6,068 and revenue is 6,808. That's quite surprising, huh? But anyways, that's good. What about others? For year 2, what is the amount of revenue you will record? What is the amount of cost you will record? And what about year 3? Please move on to year 3 also now. Those of you who have computed for year 2, please move on to year 3. Okay, Anil has shared for year 2. Very good. Anil is saying 5,985 is the cost for year 2 and 6,691 will be the revenue for year 2. Good. What about others? What about year 3? Quickly, then I'll get on to the solution. Huh? For year 3, what is going to be the amount of revenue? What is going to be the amount of cost that you recognize? Okay, great. Then I think Soumya has computed this. Soumya is saying 8,200 is the cost for year 3. Revenue is 9,200 for year 3. All right. What about others? Anyone else who has computed for year 3? Okay, great. Mohammed has shared for year 2. Mohammed is saying year 2 contract cost is 6,068. Additional cost is 150. Okay, revenue is 6,064 plus further approved is 200. Okay, so I'm assuming that all these 4 amounts you will recognize. All right, what about others? Okay, so then I think we can move on to the solution. Now, in this case, contract revenue is 9,000 to begin with. And this is the initial amount of revenue. Right? If you look at year 2, there is a variation which has been approved by the customer, by which this revenue increases by 200. So as far as revenue is concerned, this is the only information. Cost incurred or the estimated cost was 8,200 to, sorry, 8,000 to begin with. By the end of first year, this increased to 8,050. In year 2, due to this variation, this will again increase by 150, right? At the end of year 2, some cost for standard material is also incurred. Okay, so we'll have to use all of this information for the accounting purposes. I think Prem has solved the numbers for all the 3 years. He has shared that. Very good. Now, in this case, there are 2 points. See, in the exam, I think one of the biggest mistake which we generally make happens to be not reading the question proper. Right? That's the biggest mistake, because even if you know the concept, even if you know how to solve, if you read the question incorrectly, so you'll end up giving the solution wrong. If you look at the requirement of the question, it says compute the contract revenue and contract cost to be recognized in each year. P&L anyways that you prepare is for the year. You don't prepare P&L on a cumulative basis. But I understand some of you were sharing the cost and the revenue on a cumulative basis. Is that of any relevance? We are not preparing the balance sheet, we are preparing the P&L. So how can you compute the cumulative numbers? Okay, that's one big problem. Number 2, if you look at this actual cost which is given in the question, I'm not sure why you were recomputing the cost. Actual cost is actual. Can you change the actual cost? No. That's one. Number 2, this actual cost which is given in the question is till date. Is it for the year? No. It says till date. Means up to year 1, 2093 is the cost incurred. Up to year 2 means for year 1 and 2 combined, this is the cost. So this needs to be picked up mindfully by everyone, right? So now let's get on to the solution. So let's look at year 1. What is the amount of revenue in year 1? 9,000. Can we take it as 9,200? No, because 200 is the portion which has come in second year. In the first year, we are not aware of this 200. So that's why in the first year, we will go by 9,000. Actual cost given in the question, 2093. What is the total estimated cost? By the end of first year, it is 8,050. Okay, so that means this is my total estimate. So do we have an estimated profit? Yes. So there is no loss on the project. Now, what is the percentage completion? Actual cost divided by total estimated cost. What do you get? 26%. So in year 1, what is the amount of revenue you will recognize? 9,000 multiply 26%. Actual cost, it's already given. 2090. Okay. So this is the revenue you recognize in first year. This is the cost you recognize in first year. Simple. Simple. Right? Now, let's move on to year 2. Okay. In year 2, we are having additional revenue of 200 approved from the customer. So that means our revenue will now increase to 9200 total. Okay, I'm not taking for the year, total. Then the question says actual cost incurred up to year 2 is 6068. This is up to year 2. And what is the total estimated cost up to year 2? 8050, add 150. So total estimated cost now changes to 8200. Okay. So therefore, what is the cumulative percentage of work completed in second year? 74%. This is the cumulative number. Right? Now, in second year, what is the amount of revenue you'll recognize? We'll have to find out. Up to second year, if 74% work is completed, so what will you do? Revenue of 9200 multiply with 74%. 6808 is the amount of revenue which you will recognize up to year 2. And up to year 2, do you have the actual cost? It's given in the question. So we don't need to compute this. But can you recognize 6808, 6068 in year 2? No, that will be incorrect. Why? Because this much revenue and cost has already been recognized in first year. So the balance amount of the revenue, balance amount of cost is what you will recognize in year 2. So in year 2, what is going to be the amount of revenue? 4468, 3975 as the contract costs. Okay. Yeah. Now, moving on to third year. Do we have any change in revenue? Do we have any change in estimated cost? So this is the amount of revenue or cost on a cumulative basis that you will recognize up to year 3. But up to year 2, this much amount of cost and revenue is already recognized. So that's why in year 3, what is the amount of revenue you will record? 2392. What is the amount of cost you will record? 2132. Clear? Clear on this? So if you look at the requirement of the question, which asks you to compute revenue and cost to be recognized in each year, this column is answering that. So in the exam, if you don't compute these numbers, then your solution is incomplete. Okay, I understand some of you shared these numbers. Okay, now can we say that it is correct? Of course, but that's not the solution. Okay, what is the solution? This is the solution. This is what the question is asking you. And some of you who were computing the actual cost, different from this one, they also need to think through as to why they were computing the actual costs when it is given in the question. Yes or no? Yeah. Even for year 1, you computed the actual cost. I'm not sure why did you compute and how did you compute. Understood? Yeah. Everyone clear? So I think this is quite comprehensive. This deals with significant requirements in relation to percentage completion, in relation to assessment of revenue, means what is the amount of contract revenue you will pick up, what is the amount of contract cost you will pick up. So this question in itself captures a lot of requirements, yeah, at one place. So I think it's a good one to practice, to understand. So if you have any questions, any doubts around this, let's discuss that. Okay. Any questions, any doubts that you may have, let's discuss that. Soumya is clear. Okay. What about others? Any questions, any doubts that you may have? Over to you quickly. Yes, Jayendra, please pick up. What is your query? Yes, Jayendra, please pick up. Yeah, let's discuss. What is your query? Would you, Jayendra, please pick up fast. Jayendra, you're there. Please pick up. Please explain your query.
Hello.
Yes, Jayendra. Yes, Jayendra.
Hello.
Please go ahead. Yeah, sure.
Can we say actual cost divided by estimated cost is equal to percentage of completion?
Yes, of course. In fact, it's not about can we say, that's the only method that you have for percentage completion. See, either the percentage completion will be given to you in the question. Okay. Therein you will not be bothered what basis has been considered. Okay. For example, some of the questions that we saw. So it was written percentage completion is 10. Percentage completion is 25. But if let's suppose percentage completion is not given to you, then this is the only method you'll have to apply. Okay. Yeah. And what do you call this method as? Cost method. So you are using the actual cost to derive the percentage completion. Out of your total estimated cost, let's suppose your total estimated cost is 100. If you have spent a cost of 30, so what does it mean? 30% of the work is completed. Okay, so that's the principle which this method follows. Cost incurred in proportion to total estimated cost. That's why it's considered to be one of the methods. And as we discussed, this is the very common method used by the companies for percentage completion. Right?
Yes. Okay.
Any
Thank you.
more questions? Anyone else? Any questions, any doubts if you have? Over to you. Anyone else? No? Everyone clear? Sure? All right, great. So then I think we can take a break now, right? So if you have any questions, you may still let me know. We can just pick it up after the break. I think Soumya has a query. Yes, Soumya, please go ahead. What's your query? Yes, Soumya.
Good morning, sir.
Good morning.
Sir, if the outcome of the contract is uncertain,
Right.
then whatever is the cost incurred will be the revenue, sir.
Yes, that's correct.
Okay, sir. Thank you.
But in such a case, please also remember, if let's suppose on the basis of percentage completion, you are getting a loss, or in other words, if I have to specify that on the basis of percentage completion, the amount of revenue comes out to be lower than the actual cost, which will happen in case there's a loss on the project. Then you will not match up the revenue up to cost. Understood?
Okay, sir.
That's the maximum capping which is available to you. So in such a case, what will happen? You'll put down the revenue up to the maximum limit which you'll consider on the basis of percentage completion, and the remaining amount of the difference between the cost and the revenue will be nothing but the provision for that loss.
Yes, sir.
Right?
Yes, sir. Thank you, sir.
Sure. Anyone else? Any more questions? No? All right. So let's take a break and we'll continue after that. Huh? Manish, we can take a break now. All right. Okay, so now what we will do is we'll just move on to the similar sort of requirement. Okay, and with the help of some examples, we'll just try to discuss some requirements related to the disclosures. Okay, and of course on the accounting requirements. Yeah, so let's do one thing. Let's get on to this next question. And this one needs to be solved by you. Huh? Okay, so let's look at this. Illustration 7. On 1st December X1, Vishwakarma Construction Company Limited undertook a contract, okay, to construct a building for 85 lakhs. Right? On 31st March X2, company found it had already spent 64 lakh 99,000 on the construction. Prudent estimate of the additional cost for completion was 32 lakh 1,000. What amount should be recognized in the profit and loss for the year ended 31st March X2? Yes, over to you. Tell me. So what will you recognize? How will you recognize? Over to you. Quickly. It's very much on the same principles that we have discussed. Yeah, so who will explain this? So of course you need to compute and then explain. Yeah. Quickly. Let's just see who answers this. Over to you. You can start sharing your response once you are through. Okay. Tell me quickly, how will you record this in the first year? So that's 31st March X2 year end. Anyone who has solved this? Waiting for a response quickly. Okay, Harsh has finally shared the number. Harsh is saying revenue should be 56 lakhs 95,000. Okay, what about others? What about others? Quickly, huh? Are you onto this or you have not been able to solve this? Please confirm everyone, then we'll get on to the solution. Quickly. Okay, Devu has also shared the response. Devu is getting 56,95,000 as the revenue. Okay. 12 lakh as the loss. So provision to be created is 3,96,000. Okay. Some is getting the same amount of revenue. All right. What about others? I think most of you have been able to compute this. Yeah. Okay. So now let's get on to the solution. See, this is again a conceptual one, but it's again very important to get the conceptual clarity. Okay. So now what I'll do is I'll just get on to the solution. I think Prem has also computed this. Great. So in this case, if we look at the cost, actual cost incurred is given to us. That's 64,99,000. Okay. And we are also told estimated cost pending to be incurred. So the additional cost 32,01,000. So all in all, we can say total cost comes out to 97 lakhs. And what is the total revenue? That is 85 lakhs. So which means on this project there is a loss. Clearly? Yeah. So there is a loss on this project. So if there is a loss on this project, what do you need to do? You need to recognize that upfront. You will not wait for next years. You will recognize it upfront. Okay. But in this case, first of all, we need to find out what is the amount of cost which will get recorded. So if you look at first year, okay, let's suppose this is our first year. Okay, now actual cost is what? 64,99,000. And what will be the amount of revenue? If you go by percentage completion, we'll have to find out the percentage completion. So what is the amount of percentage completion? We'll apply the cost method. So that is actual cost incurred till date divided by total estimated cost. So therefore you get 67%. Okay, so revenue therefore should be 85 lakhs into 67%. So what will be the amount of revenue to be recognized? 56,95,000. Now, if we recognize this revenue and this cost, can you tell me the amount of loss we will record? What is going to be the amount of loss that you will record in the first year? See, automatically some portion of loss will get recorded if you do this accounting. Yes or no? Yeah. So what is that amount of loss which will get recorded? Devu says 8,04,000. So that is the difference between these two. Right? So 8,04,000 is the amount of loss which is automatically getting recorded. Automatically means on the basis of the accounting requirement that we follow. Which accounting requirement? To record the revenue on percentage basis. But in this case, total loss which should go into the P&L should be what? 12 lakh. P&L should show a loss of 12 lakh in respect of this project. So that means balance amount means the difference between these two, A and B. Okay, so that is 3,96,000. So this is the amount of additional loss which will have to be recognized in year one. Okay, additional loss which will have to be recognized in year one. And how do you record it? By creating a provision. By creating a. So can you tell me what is the accounting entry that company will pass in year one for creation of this provision? Quickly, what is the accounting entry that company will pass in the first year for creation of this provision of 3,96,000? Over to you. What accounting entry will be passed? Tell me quickly. Okay, so let's look at this accounting entry. So in the first year, for the booking of this provision, what should be the accounting entry? Provision for loss debit 3,96,000 to provision for loss 3,96,000. Okay, one portion goes to P&L. So this is the P&L impact. This will go to balance sheet. Right? This will go to balance sheet. Clear? Everyone clear on this? Yeah, everyone clear? Any questions so far? Any questions, any doubts so far? No? All right, great. Soumya is clear on this? Okay, so now let's look at one more question. See, if you look at the requirements of AS7, some of these things that we have discussed so far, they are all about recognition, measurement. This standard also requires disclosures to be given in the financial statements. Disclosures in relation to the project, of course. Why are these disclosures important? Because in the first year, you are not recording entire amount of revenue. Portion of revenue you have moved to next year's. Okay. During the first year, it may have happened some money is collected from the customer, some amount is billed to the customer. The revenue recognition criteria is different, so that's why amount billed is different from amount received as well as amount recognized. So that's why, to avoid confusion in respect of all of these things, standard gives you some disclosure requirements. Okay. So now, instead of looking at these disclosures and trying to understand, what we will do is we'll look at one question. In the question itself, we'll try to look at some of the disclosure requirements, and then we'll come back to these disclosures. I think that is when you will get more clarity around. Okay. All right. Let's look at this one. A firm of contractors obtained a contract for construction of bridges. So if there's a construction of bridges, what does it mean? It's a construction contract. Clearly. In the books of contractor always. Yeah. Following are the details available in the records for the year ended 31st March X1. Total contract price is given. Work certified for the cost incurred. Now it's a new term. Work certified for the cost incurred. Work not yet certified for the cost incurred. We'll talk about it. Okay. Estimated further costs to complete. So one is the estimated cost. So they are saying whatever cost has been incurred, further costs which are estimated to complete is also given. Progress payment received means this is the amount of money which the customer has paid. And amount to be received is also given. Okay. Firm seeks your advice and assistance in the presentation of accounts, keeping in view the requirements of AS7. Okay. Now, in this case, there are few terms that have been used. Let's try to understand those terms. See, generally what happens is that in case of these type of construction contracts, contractor will keep doing the work. So there will be a site, let's suppose road is getting constructed. So at the year end, contractor will say that I have spent, say, out of 1000 crore, I've spent 300 crore. So will the customer accept it? Answer is no. Customer will also do the verification. Customer will do the checking of various invoices. Customer will also do a physical verification. Okay, some sort of inspection he'll do. After which, customer will certify. If contractor is saying I have spent 300 crore, so the customer will certify. There is a system which is set up by both the parties. So the customer may say that I'm not okay with 20 crore of the amount, so 280 amount is something which looks okay to me. In that case, if you look at the contractor, can we say the cost of the contractor is 280? See, the cost of the contractor is no doubt 300. That is actual. But out of that actual cost, 280 is the amount which has been accepted by the customer so far. So what will happen to the balance 20? Balance 20 is under discussion. Customer may approve that in the next year, or maybe there is some dispute on that, which may get rejected. We don't know. Okay. That portion is what you call as work not yet certified. Now, how are these dealt? We'll talk about it. Now, Generally, in case of construction contracts, because it's a long period of time, so what will happen? Generally, what you will see is in those contracts that over a period of time, if let's suppose contract is for 3 years, so the contractor and the customer will agree for some billing. Contractor may say that, let's suppose 100 crores is the total revenue. So contractor may say that I'll need funds to start the project. So that's why at the time we sign the contract, I'll bill you for 10%. Okay. So an invoice for 10% will be raised. And the contractor may receive 10%. And during the course of the project, let's suppose somewhere over here, somewhere over here, somewhere over here, again, say somewhere over here, somewhere over here. This is how the contractor will keep billing the customer on the basis of different milestones, which they will specify in the contract, and will keep receiving the money from the customer. Okay, so that's about the collection. Now, in this case, in the first year, there are a couple of things which are important to be looked at. Now, this is very important point. Huh? In the first year, what may happen is, for the purposes of accounting, what will happen to the contractor? You as an accountant, you will suggest, see, accounting has to be done as per AS7. So whatever you bill, whatever you collect, we don't know. Yeah. Let's assume percentage of the work completed was 25. Okay, so therefore, amount of revenue which has been recognized is 25 crore. So this is the amount of revenue which has been recognized. Okay, but what may happen is, contractor may say, but please understand, during the year I have only billed twice. I have raised the invoice twice. First at the time of signing of the contract, then at the time of completion of some milestone, which is 20%. Okay, so if you look at the invoices, amount which is billed, what is that? 20 crore. Amount billed is what? 20 crore. Billed means for which invoice has been raised. Now in this case, when you recognize revenue for 25 crore, whereas the amount billed is 20 crore, what do you call the balance amount as? Unbilled revenue. Means the revenue for which billing is not yet done. Billing is not yet done. Okay. And in this case, it may have happened that against this 10%, 10 crore was released by the customer. Against this 10%, only 8 crore was released by the customer. So actually, the collection amount is what? 18 crore, which is also called as progress payment. Received from the customer. Progress payment received from the customer. So can you see this? One is your revenue as per AS7. That is different. Second is the amount that you have billed, which is as per the contract. Third is your unbilled revenue, which is again as per the contract. Fourth is the money you have collected, which you call as progress payment. Okay. So all of these terms we are now going to use and apply in this example. Okay. Further, as we discussed, that during the year, in relation to this project, various costs may have been incurred. Let's suppose cost amounting to 22 crore was incurred. So one portion is verified and certified. Another portion is verified and not yet certified. Not yet means this is pending certification. What is the meaning of certification? Certification means approval of the customer is pending. Okay. Now, how is that going to impact our accounting requirement? That again we need to find out. Okay. So all of these aspects we'll plan to cover in this particular question. Yeah. Are you clear on all of these concepts? Everyone? Quickly. Are you clear on all of these concepts that we have just discussed? All of these terms? All right. Harsh is asking progress payment received. Harsh, can you please explain your query? Over to you. Harsh, can you please explain your query? Harsh, over to you. Please pick up fast. Harsh, are you there?
Good morning, sir.
Good morning.
Sir, what is progress payment received?
Yes, so what's your query on progress payment received?
Sir, I don't understand.
Sorry?
ये क्या होता है?
Okay, what is this? Okay, yeah, sure. So let's try to understand. During the year, contractor has raised 2 invoices. Is this part clear to you? Yeah, Harsh? Harsh, you're there? Okay, now, invoice for 20 crore has been raised. So now I'll come to your query. Against which customer has paid an amount of 18 crore. So this is the money which the customer has given to the contract. That is what you call as amount received from the customer or the progress payment. Why are we saying progress payment? Because the project is in progress. During the progress of the project, customer is making the payments. That is what you call as progress payments. Clear? Harsh, clear on this? Harsh, clear? Very good. Then I understand. Sohan, you have a query? Sohan, over to you. Sohan, any questions if you have? Okay, no worries. All right. So let's go to that question. Okay, so now we have the contract price. Just to revisit the numbers, now we have contract price, work certified, work not yet certified, further costs pending to be incurred, progress payment received. Okay, and the progress payment already received. So I'm just hoping you are familiar with all of these terms now. Now, how do you present that? So we'll have to look at all the requirements. All the requirements means how do you present them in terms of disclosures, in terms of recognition, all of those aspects we'll discuss. Okay, so now In respect of this project, total contract price is 1000 crore. And if you look at the cost incurred is 500. Incurred but not yet certified is 105. And the further cost expected to be incurred is 495. So that means total estimated cost will be 1100. Yes or no? Total estimated cost will be 1100. So clearly there is a loss on the project. Right? So if there is a loss on the project, what do you do? What do you do? You will have to recognize entire loss in the first year. Correct? You will recognize entire loss in the first year. Okay. Now, let's first of all understand what is the amount of loss which will get recognized through percentage completion. Because the balance amount of loss, you will have to create a provision. Correct? Now, in the first year, what is the amount of revenue do we recognize? We need percentage completion. But is the percentage completion given to us in the question? No. So how do we derive the percentage completion? Can you tell me? How do you compute the percentage completion? On the basis of cost. Yeah, so the cost method will have to apply. Correct? So if you apply the cost method, so we are given two costs. Cost which is certified and not yet certified. What is that? 605. This is the actual cost divided by total estimated cost. What do you get? 55%. So that means work completed till date is what? 55%. Okay, 55%. So 55% will be the amount of revenue we will recognize. Okay, so therefore, against this cost of 605, what is the amount of revenue you will recognize? 550. 550 is the amount of revenue you will get. Correct? Now, there is another amount which is required to be computed. What do you call it as? Gross amount due from the customers or gross amount due to the customers. If let's suppose you have received extra. So there is a formula to compute that. What is that? Contract costs. Okay. Plus recognized minus recognized losses. Minus progress payments received. Minus progress payment pending to be received. So what do you get? 605 is the contract cost. Cost that you have okay, in respect of losses that you have 100. Okay, then progress payment that you have received, is that given in the question? Yes, 400. Pending to be received 140. So amount due to the customers is 35 lakhs. Okay, because this amount comes out to negative, so that's why we'll say it's a liability. Now, how do you present this? How do you show this in the financial statements? Contract revenue we have computed on the basis of percentage completion, that's 550. Against this, we have contract expenses of 605. Okay. So now, recognized profits less recognized losses, 100. Okay. Or you can say that total loss which you will present is 100. What is the amount of progress billings? Billed plus unbilled. Both you'll have to specify. It's 540. Okay. Retention. Now, what is the amount of retention? Retention means the amount which has been billed to the customer, but which is not yet paid by the customer. So generally, when you bill to the customer, like in the example we saw, 20 crore was billed to the customer, but out of 20 crore, only 18 crore was paid. Remember that example in the working sheet, right? In that case, 2 crore which was not released by the customer, what do you call it as? Amount held by the customer or amount retained by the customer. So that is what you call as retention money. Generally, customers will not release the entire amount. They will hold some portion. Generally, they will hold some portion. Okay. And when do they release that? Maybe after some more milestones are completed, or maybe once the project is completed. So that is 140, right? Gross amount due to the customers. We just computed that. It's 35 lakhs. Then you will also have to disclose method of revenue recognition. What is the method of revenue recognition you have used? Percentage completion method. So you'll have to disclose this. Okay. For determining this percentage completion, the method that you used, that again you'll have to specify. So method of determining stage of completion or method of determining percentage of completion. So what method did you use? Cost method. Remember? Yeah, so you'll specify. It's based on proportionate cost out of the total estimated. Okay. So this is what you'll have to specify. Clear? Everyone clear on this? Yeah? All right, great. So now I think we can look at one more question quickly. Yeah? And I think we are largely done with the concepts in this particular standard. So that's why now this one needs to be attempted by you. Okay, you need to solve this on your own. And you should just attempt to solve this fast and share your response. Huh? Okay. So this is again around the stage of completion, means percentage completion. You are required to show the P&L extract in the books of a contractor in respect of following data for year 1 only. Okay, only for first year. Contract price fixed 600. Cost incurred to date 390. Estimated cost to complete 260. You are already told that you are required to compute this, show this only for first year. So please remember. Assume that contract period is 2 years. Not relevant for us. Contract is 100% completed by year 2. Actual cost incurred is the same as total estimated cost. So they are saying in year 2, actual cost will not vary. So whatever is the total estimated cost, that is where the actual cost will stop. Okay. So now in this case, can you tell me how do you present it? What amount of revenue you will record? What amount of cost you will record? Do we have any losses? So this complete presentation you need to do. Over to you quickly. Start solving this on your own and let me know the answer. Please don't look at the solution. Yes, over to you. Quickly, huh? Over to you. What is the amount of revenue you'll record? What is the amount of cost you'll record? Okay, great. Anil has shared this. Anil is saying cost will be 390 and revenue will be 360. Okay, good. Anything else, Anil, that you like to add here? I think Almaz, Somya, they are also getting the same answers. Okay, anything else that you have on this? You also need to find out the project, whether it's in profit or losses. I think accordingly you need to get onto that working also. Quickly, Soumya is saying there is a loss of 50 crore. Sorry, the numbers are in thousands. Okay, so the loss is of 50. Okay, so how do you present it? And what is the amount of loss you will book? So one portion you will get through actual recognition on percentage basis. One portion you'll have to pick up on a provision basis. I think Prem has shared all the numbers. Prem is saying a revenue 360, expense 390, provision 20, and thereby you get a loss of 50. Okay. Then I think Armaz is also getting the same provision amount of 20. Devo is getting, I think, the same numbers. Very good. What about others? Quickly, everyone, I think it's quite simple. We have already discussed this concept quite a lot. Over to you quickly. Okay, Soumya is getting loss for first year will be 30 crore and therefore a provision, sorry, 30, huh? And the provision of 20 will have to be recognized. Okay, good. So I think we can get on to the solution now. Yeah. Okay. Virender is getting the same answer. Great. Now, in this case, the first thing you should always check, as we have discussed this, total cost for the project 390 plus 260. What is that? 650. What is the total contract revenue? 600. So clearly there is a loss on the project. Clearly there is a loss on the project. Yes or no? Yeah. So now, if there is a loss, then you need to find out what is the amount of loss which will get recognized. So in the first year, actual cost is given to us. We don't need to compute that. That is 390. Okay. So on the basis of actual cost, we can compute the work completion percentage. It's 60. So if you follow that, the revenue that you will recognize will be 360. So that means in year one, revenue will be 360, cost will be 390, which means in year one. So let's go to year one P&L, which means in year one, you will end up recording a loss of 30. But do we need the loss of 30? No. We need a loss of 50 in first year. Why? Why? Because 50 is the total project loss. Okay, so therefore, what do you need to do? Out of this 50, 30 is already recognized in first year on the basis of percentage completion method. Balance 20 will have to provide. Balance 20 will have to provide. Yes or no? Anil is saying because we need to apply the concept of prudence here. Right? So how do you recognize that? Create a provision. So if you create a provision that goes to P&L of 20, so thereby you get a loss of 50 in the first year. Okay. Now, this is what you have in year 1. Let's also look at year number 2. Now in year 2, what will happen? Balance amount of revenue will be recognized. So what was the total amount of revenue? 600. Out of 600, 360 is already recognized. So in year 2, we will recognize a revenue of 240. Correct? We'll recognize a revenue of 240. Further, we will recognize a cost of 260. We will recognize a cost of 260. Now, what does it mean? It means in the second year, again, we will end up recording a loss of 20. If you put down these two numbers, so what will happen? In the second year, again, you will be booking a loss of 20. Yes or no? Yes or no? Yeah. But can we do that? Answer is no. Why? Because we have already booked the entire loss on this project in the first year itself. So if you again book this loss of 20 in second year, that will be inappropriate. So that's why what should you do? The provision which was created in first year. So one portion of the provision, one leg of the provision you had taken to P&L, other leg which you had taken to the balance sheet, you will now reverse that. Okay, so that balance sheet item has to come to an end. That balance sheet item has to come to an end. So what do? You reverse that balance sheet portion. So thereby your P&L will become neutral in the second year. So in the exam, please remember this. In the exam, what you may do is you may definitely book a loss because you have discussed this concept quite a lot. So you'll have this complete understanding. But when you move on to the next year, you may again end up recording a loss, which is incorrect. Okay. Everyone clear on this? Clear? Yeah. Any questions? Any doubts if you have? Any questions? Any doubts? Soumya is clear. What about others? Any questions? Any doubts? So I think with this, we are through. Okay, we are through for our discussion on this accounting standard as well. And with this, we can just conclude our session also. So in the next session, we'll start a new topic, okay, which is about other accounting standards. Okay. Yeah, thanks everyone for your time today and for this wonderful participation. Thanks so much. Manish, we can close this now. Over.